Hello and welcome to the Bankers Tech Talk series. I'm Kimberley Long, Asia Editor at The Banker, and I'm joined today by Gabrielle Patrick, CEO of Knabu, a cryptocurrency clearing bank that looks to serve the blockchain community. Gabrielle, thanks for joining us today.
Thank you.
So you've highlighted before how blockchain companies often struggle to get bank accounts. How are Knabu going to help with this?
So we're in our process of building a clearing bank here in the UK. We've also been approached by other jurisdictions. And this problem of a lack of banking for crypto companies and blockchain companies is well documented in the news. No matter how certain jurisdictions especially try to encourage this type of business, the traditional banks simply will not bank blockchain companies. Mostly the reason given is because of de-risking, that they pose an anti-money laundering risk. But this is untrue. And so we intend to provide companies with business banking with an appropriate risk profile. When we tried to solve this problem for ourselves, which is how this really evolved, we also saw that this problem not just touches blockchain companies, but other neglected business segments. So fintech companies that have innovative models, video gaming companies that deal with digital assets, and remittance companies. So our solution is purely to provide business banking as a clearing bank here in the UK.
And Knabu, as you say, is looking to become the first blockchain clearing bank. So how will this solve the issues around centralized clearing?
So to understand the issues, you have to have a little bit of a context as to how banking evolved. In most jurisdictions that have a banking hierarchy, the central bank, the state arm that is responsible for monetary and financial stability, evolved over a period of time, but started as a private financial institution. So if you leap forward in time, you find a system where the central bank in most respects acts as a central spoke of a wheel. The different financial actors ultimately have to settle either directly or indirectly through the Central Bank of England. The reason why I'm explaining this, and it applies for other central banking systems, is that because of how the ecosystem has evolved, it means that certain compliance costs have escalated, especially post the 2008 financial crisis. So one of the ways we're looking to tackle one of the issues is simply by reducing the compliance costs. And we could do that significantly by using blockchain technology as part of our back office processes. So we'll be ripping out those costs, thereby reducing our cost margins and thereby reducing the cost of the service that we provide to our customers. The other aspect of centralized control or centralized clearing and settlement systems is that because of this hierarchy, a lot of the neglected segments cannot access banking because they ultimately have to rely on a sponsored banking relationship. That is to say that traditional infrastructure is what we're looking to plug into with a direct settlement account with the Bank of England on the one hand, but on the other hand, we're looking to plug into blockchain networks, distributed public permissionless networks, which have their own economy and their own value transfer flow. And so by combining the both, we could create a layer of fluidity that does not otherwise exist. And that's one of the major disadvantages of today's clearing and settlement infrastructure.
So what is the position of the central banks on blockchain and cryptocurrencies, and what do you think is their way forwards?
I think most central banks today, 10 years later after the invention of the technology, definitely publicly recognize the utility of the technology. A lot of the conversation in the past has been a concern over digital currencies. I think most central banks have publicly stated that they don't regulate digital currencies, but they are becoming concerned about consumer harm and derivative products or financial instruments which are pegged to crypto assets. So I think the long and short of that is that the regulators recognize the utility of the technology. This is something that we're interested in. And as a blockchain technology company, we would approach banking and that type of financial services in a different way that a conservative bank would.
From your perspective for Knabu now, what is your plan for the next 12 months? Are there any milestones you want to reach?
Yeah, there are some important milestones that we want to reach in the next 12 months. We're at a stage where we are almost a year into our regulatory process. We have seasoned people in place, but we need more. So we're at a place where we're going to grow and scale. We're actively in fundraising mode. And so we are looking for companies and people who are willing to back us and who are interested in this opportunity. So our very important milestone this year would be to be operational as a bank, by the end of 2019. It may spill over until the first quarter of 2020, but we're hoping not. And there's a possibility that we will receive a prior approval for payments. And so those are two important milestones that we're looking to achieve.
Okay, it sounds like you've got some very ambitious plans then for the next 12 months. So thank you very much, Gabrielle.
Okay, thank you.